Vivek Saraogi, Managing Director, Balrampur Chini Mills. Good morning and thank you for taking time out. To begin with, as my colleague was just flagging off, a whole host of factors that are at play with respect to the sector, be it the global supplies easing, the improved profitability outlook, or even the ethanol blending. How are you looking at the overall sugar cycle as we've been talking about that has shrunk quite considerably?
Yeah, good morning. So it was a pretty accurate introduction, I thought, to the current situation. So let's take the global situation and then I'll come to the domestic. So he's accurately wrapped up the global situation. There is drought in Thailand. Thailand could be below 10. Indonesia, etc. are upping imports. India would be 26.5 million vis-a-vis 33 million last year. Come here. And as we go ahead, next year is too early to predict, but with the government policy, and I repeat, that has been our real tailwind, is the government understanding the sector well. So you have the quota system, you have the minimum minimum selling price, you have export quota, and let me appreciate that the government has decided to reallocate the MAEQ, that is the export quota, and people like us are bidding for it. So the non-performers have been asked to surrender their quota, and the performers like us, and we've done 100% of our previous export, have been allowed an additional window to bid for more. That being the case, the global prices yesterday were north of 15.5 cents, and that gives us a very decent realization.
Would be that point at which government would say,
so,
Chini, morning Vivek, what would be that point at which government would start saying, Chini महंगी हो रही है, we need to worry, Diwali आने वाली है, Dussehra is around the corner, let's do something to keep sugar prices under control.
Morning, Nikunj. So just let me clarify that the government itself has put the minimum support price in place. So चीनी महंगी होने वाली या किसान, हमेशा दो में से बीच का ही रास्ता चुना जाता है. Having said that, I don't think the government at all is uncomfortable or even consumer level resistance or any, any body stroke, any kind of a noise which is resisting prices at these levels have ever come up. So I think right now, because we're in the midst of production season, UP is at 32.5. I see this gradually moving ahead.
What my colleague Ajay Vivek just pointed out reminds me of a scenario which I saw in 2004 and 2005. When sugar globally and locally moved into a 2 or 3 year bull market. Are you getting evidence that this could be a repeat of what we saw, let's say, a decade ago, a decade and a half ago?
No. See, but let's understand how we are performing and why. You're sitting on a lifetime's high inventory of 14.5 million last year. Now that would have meant mayhem and complete red in balance sheets in everything. But because of the government policy, which was quota, MSP, B-heavy diversion, etc., we had one of our better years in life. Now, this is gone off. Excuse me. The earphone is fallen off. Earphone, gir gaya. Laga dijiye.
We'll just get that fixed for her, Mr. Saraogi. Of course, the perils of live television. But do go ahead, Mr. Saraogi, with your chain of thought.
Sorry, yeah. So basically, at the life's highest inventory level, you're recording your best performance. Now, that is a very big thing to say because of the entire policy of state and center combining. So now if you see the export program, you've been given 10.5 rupees support from the government. Now earlier your realization, let's say, was 20. Now for this additional quota where we will bid, our realization could be 22.5, 23, which means coupled with that 10.5, you could be 33.5. So you would average at around 31.5, 32 in export, which is your better than your cost of production. So you're allowed to sell your sugar out, government supports you, you are given a minimum support price here, your B-heavy ethanol is supported, the state government doesn't raise prices. Now, having said that, this is just basically the right program. There is no great shakes, but to do the right thing at the right time is a big thing in itself.
Okay, fair enough.
So continuing this policy is the best play.
So let's say if this policy continues for another 2 years, sugar companies have had their good and bad patches. But if this policy continues for 3 years, and since operating leverage would kick in, you've taken the debt out of your balance sheet, what should we expect from Balrampur Chini then? I mean, dhamaka numbers, dhamaka growth, that's what ultimately shareholders want.
No. See, dhamaka is not our style, and I don't think it's possible in sugar that way. What is happening in my mind is very steady, and slow and steady wins the race. We will be looking out for good acquisitions, good opportunities. We are looking at putting up, investing into more, let's say, capacities in distill. Let's say, and I mean this, next year production will go up again. So this support program needs to continue. And if at that point one can get into juice-based ethanol, and one is looking to leverage every drop of raw material you have in the company. With this, we also always on the lookout for good opportunities where we can buy mills at the right prices. Keep our debt at a very minimal level, work, on every efficiency.
Okay. Data seems to be indicating that we are seeing an improvement in realizations for most of the Indian players. What does it stand like for you, and what is the outlook on realizations?
So realizations will be in this range only. Let's say it was an average of 33, I expect an average of 33. Our recoveries are doing very well. UP is crushing well. Our recovery as a company could be 0.25 higher than last year, and our cane crushing will be marginally maybe at slightly above last year maybe. So we'd have enough raw material to handle, our allied business. Yeah.
Every sector, Vivek, in last 10 years has seen implementation of technology. I want to understand from you that how technology has changed the way how sugar industry would move, how you will be able to assess the market, and how exactly you will be able to forecast the future.
That's a very good question. So the use of technology in sugarcane, besides automating the factories, etc., a big change could be in the cane part. We are now moving towards satellite mapping, where you could, via satellite even get to predict your crop for your factory, and if disease, if any, in any area within the command area of the factory. So a lot of technology would now be used in cane as we go ahead. A lot of technology would be used inside the factory on automations, and technology, basically in your day-to-day working. The main new thing would be cane as I see we move ahead.
Let's say next 3 years or in next 5 years, how much of your existing revenue will come from the pure non-sugar business? The migration towards ethanol, the migration towards other value-added products, how do you see that changing for your company?
See, as we move ahead, depending on if we are able to make another new investment, like Guleria Distilleries come up, it's running at 110% capacity. It's fully in play on the right date. Now, if we are able to make, let's say, one more investment based on juice or based on syrup, so that capacity will give an additional growth on the byproduct side. So as we move ahead, a lot of profitability can get predictable. And that is our main program, to get into predictable areas and to have a basic hedge on your main product and not losing the upside of the main product. So ratios, figures can't be said, but as you would see the balance sheet and as we go ahead, you'll be able to understand.
Saraogi, pleasure speaking with you. So while we won't see dhamaka numbers, slow and steady, and you've spoken about a lot of the government intent, policy, as well as outlook on your ethanol blending and capacities.